Santa has been spotted in Australia and also on Wall Street. Some investors are actually buying stocks while others are out buying presents and fighting the lines. So let's talk about here the stock market here today. We'd like to welcome everyone on this Christmas Eve. I couldn't think of a better place to be. My best years of all the time I've been here is when I got to teach on Thanksgiving Eve, Christmas Eve, and New Year's Eve consecutively. Thoroughly enjoyed it. 2017, great year. Okay. So it's always great to be with you because you are my investing family. So hopefully you're getting properly prepared for this afternoon and tomorrow with family and friends. And pets. Don't forget the pets. I got to, get the present out for Jax today. So just real quick, we'd like to welcome all of you. Michelle, Grace, see ya, Scott Luck, aloha back to you. By the way, coming your way in the summertime. So Jack McGee, JP, and many others, welcome to all. Now, just real quick as we get started, remember you could follow us on X. We do post educational content and announcements, so check that out. Also, just real quick, this class again, talking about trading growth and value. Boy, there's some interesting examples here today. Try to break this down in terms of like showing really growth or value. The way you really see growth or value is, Kevin and I teach the class really on Friday, and we actually give the symbols that actually are really a basket of growth names. Look at that. Think also about a basket of value names. Look at that. That way you can kind of see what are investors really buying. By the way, feel free to look at also the income as well. That's going to give you a quick snapshot as far as what investors are really buying. Now, just real quick as we get going here, remember the information is provided for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of research. It's a major part of it. It's not the only part of it. There's other things that are very interesting as well. Also remember that the paper money software application is for educational purposes only. If we talk about dividend paying stocks, understand that that is not like a fixed income product. They can change the dividend policy, okay? And so just understand that it's paying a dividend, but that could change. Also understand, and that could mean they could cut it slightly, they could raise it, etc. All of the above. Also remember that investing in stocks involves risk, and also when we talk about examples, they are just that. Now, I'd like to actually take a quick look at just real quick where the market is. And I mean, here we are, right? Let's just call today the stocking stuffer called the S&P 500, okay? Today, I was going to say doink, but I won't say that. Kabuya for the S&P 500. I had one person saying don't say doink and about 10 of you saying no, James, keep saying doink. I'm going to say kabuya to the upside. So this is what we've kind of been talking about, right? This little up and down action that we've actually had. It hasn't broken support, but it was kind of building a trading range. And sometimes you really see that really on maybe like ascending triangles. And if we go back to really a weekly chart, and I'll show you kind of some moving averages that are a little bit not as tight as the whole moving averages, that's kind of what we've been setting up. If I went back to the chart, this again is looking at the whole moving average at 1020. If I went back to this chart right there, which is really more your kind of moving average that are not going to run as tight, your 10-week exponential moving average, kind of went down there. We went slightly lower for the intra-week. The very next week, we fired back to the upside. That's on the weekly chart. What did it look like on the daily chart, just super quick? That's what it looked like, okay? Just kind of more of a trading range. And so sometimes you kind of have those to create some higher levels of support. Is it just the S&P? I'm glad you asked. The answer is no. Now, brand new high really on the Dow Jones? No, not yet. But boy, bounce. Where could we see those bounces? It's simple to see the bounces. Okay, simple. Because if we see the orange or purple or red color candles, those are the pullback areas. All you got to do is identify that and circle those bad boys. And if you actually see those are actually getting higher than the previous one, those would be examples of higher lows. Oh, don't make it so complicated. Now, if we're actually seeing the S&P 500 go to the upside, we know that's heavily weighted to technology. We also know it's weighted to financials, clearly, if we did our due diligence. And so we would probably say is there some sectors like how's tech doing, how's financials doing, and are there any other areas that are getting a push? If we look at Dow Jones, large cap stocks, those are actually strong too. So there's probably going to be a pretty decent chance to find something. Even if we only had one eye, we could probably find something. Now, if we take a look at, let's say, the small caps, brand new high in the small caps, trying to get a bounce, okay? But larger caps actually getting the move. What about the NASDAQ? Is it starting to get a little bit more participation? Kind of looks like a pennant pattern, if you will. Just draw it real quick, and then we're going to look at sectors, and we're going to talk about examples. There's the higher lows over time. There's the lower highs. And it kind of looks like it's getting to the point of, could it be starting to breach that area of resistance? So when we talk about indexes, they don't all have to go up the same amount. They usually don't. We got two leading right now. It's the S&P and the Dow Jones, okay? Now, quickly, when we talk about, let's say, sectors, and let's go back to the list. Let's work this list together. Let's go to that list 3 there, okay? If we were to, let's say, look at the week, why are we looking at the week? Well, we want to actually really see can anyone actually tell me why we look at the week? What one thing are we trying to find? Remember what it was? What I told you it was? We're looking for bull flag pulls. Whatever is up the highest for the week is probably, if you go look at the chart, a bull flag pull. Of course, gold has been leading. It's not new, okay? Semiconductors. Now, notice you haven't seen Mr. T around in a couple of years. I wonder why. Okay, he was the one that he bought gold first before everyone. Joking. Okay, but if you take a look at this, semiconductors pushing back to the upside, that's technology. Okay, when we look at, let's say, the IXT, the technology, there it is. There's energy. There's financials. There's base materials. Now I want to kind of pull these up now. So if we're talking about bull flag pulls, there it is. If we're talking about something that has a trend, stocks, transports, gold, discretionaries, financials, technology, and base materials. I also want you to pay attention to really industrials here. So if we're seeing, let's say, decent returns on the week, but also 1 month returns, 21 trading days, that actually is telling us there's something here that really has a trend. Now go down and look at the bottom. Utilities, negative, not much of a trend. Real estate, barely at par, 0. Probably not much of a trend. When we actually really go back and look at the trend column on the weekly, lots of green. If you hate the color green, I'm not going to say sorry. I'm not going to. Now, if we take a look at, if we got trend weekly green, that probably actually tells us potentially, could we have trend dailies that are 3 as well? What is your favorite color? It could be green. What is your favorite number? It could be 3. Okay, now let's go talk about a couple of these names. So I want to kind of look at, just real quick, the IXM. Okay, now has anyone looked at that area in the last couple days, minutes, hours? Anyone? So I'm going to pull up just real quick IXM. Let's poke around here for just a second. Okay, so when we go look at the sector in general, so remember, when we look at the whole moving averages, it's gonna track the price of the stock more closely. If you said, I don't use that, but I like to use maybe like a 10 exponential moving average, remember, the rule of thumb that we never forget, I mean ever, is the price above the 10-day exponential moving average. If it is, you got momentum. If it is, you could actually have a trend. That's what the investor is trying to actually find and trade and or invest in or consider. Now, if I take a look at this, I want to go back to this chart just real quick. When we look at the sector, that is a brand new high there. If that area is making a brand new high, it's very unlikely that it's a recession. I hear so many people talking about payroll data, payroll this, jobs. I get it. It's a part of the economy. I get it. But I think what we need to really kind of talk about is really kind of what the market is doing. I know there's Main Street, Wall Street. I get that. But I think sometimes we kind of miss what is it that they're really trying to do. Are you trying to become an economist or an investor? Okay. Could we use an economist mentality to actually be an investor? Sure. So don't forget what the point is of actually knowing the data, and also actually look at the chart as well. So when we actually look at that sector, let's kind of look through a couple stocks. So first off, when you look at that JPM, that's a brand new high. Jamie Dimon was never so wrong, but he's richer than he was at the beginning of the year. If we look at, let's say, WFC, pretty decent push there as well. Now remember, you do not have to be like a search specialist. You can drive down State or Main Street in your town and you could run into these names. If we pulled up C, well, that doesn't look bearish. If we actually look at BAC, that doesn't look bearish either. So we're talking about some of the big ones, and the last big one is Goldman Sachs. Now, if you take a look at this, if you said, well, how on earth would you find those? Go down State Street, Main Street, go to the Market Watch. We're actually going to go to just real quick visualize for a second. And what we're going to do is we're going to isolate. Now, I'm going to choose the S&P 100, less stocks. If I click on that left-hand side, now what you're going to see is the sector financials. Click on it, and then here's your list, okay? Now, if we take a look at these, when I say here's your list, these are the ones that are in the S&P 100, and they tend to have some liquidity. Not always, but verify. There's a greater chance they probably could. Now, what I want to do is I want to kind of look at just real quick the AXP. I also want to look at the GS for just a moment. So what I want to do is let's go to this just for real quick. And again, I want to be disciplined to what we've talked about. Again, we talked about the trend trading plan. We talked about the swing trading plan, etc. And so what we're going to do is we're going to look to execute that, okay? So I know I kind of gave you a lot of information, but now what I want to do is just use that information to execute the trades. Well, if I go back to this chart for just a moment, if what we said, what type of price pattern do we see on this chart, it does appear to be kind of like a flag or flag, however you say it. We see a move to the upside, which has been quite enormous, a shallower pullback. And then if we take a look at this, again, I'm not trying to filter based upon what my thoughts are. There's one, here's give me two, and then we're actually trying to get three. Now, we've said before, hey, if the investor wants to try to get in when there is the first setup, they're going to get on number one, as long as it's in the upward trend, okay? So we're not picking a stock that's downward trending and then, oh, the moving average went green. We still want a trend, okay? Now, if we have a trend, we actually see that we have one. We said in our examples, we could actually maybe even dollar cost average, try to buy half on the entry one, try to buy half on the entry two. So if we said right now, what are we really at? We're really at two, trying to go to three. Now, what I want to do in this case is I want to go back to just real quick to the paper money account for just, let me drop back on this. So if I went and looked at a 3-year weekly chart, this is what this chart looks like. Now, I hope that one of my goals for 2025 was to stop investors in saying it's at a high, therefore I can't buy. Because, for example, as we know that a high is a confirmation of an uptrend. And if you're a bullish technician, you're probably trying to buy things that are trending. I hope that we've actually made you aware that highs are not bad. They're a confirmation uptrend, and if you can make a high, second thing I tried to focus on this year was if we make a high, the highest chances to make a higher low. You make a higher high, you make a higher low, that is more confirmation of an uptrend. It's not based on feelings, okay? Feelings, I don't even know what feelings are. What are feelings? Now, the biggest actually thing is when you take a look at this, I'm going to actually go back and we're just going to try to measure. Now, I'm going to kind of take a little shorter measurement. We see one little push right here, a little run up, pull back to the rising moving average. Notice that green shading there. Bulls in control. Now, I'm going to draw this really from this last pullback area, and I'm going to draw it from the last pullback area to there. Now, we could take it, for example, down even lower, but I'm even going to, now what that's going to do is it's going to give us a shorter price target, okay? The prior high or potential resistance, about 910, up above us right there is going to give us about 971 if we use the 161. Second, we actually see in this case, really the 1009, the 200% extension, which is really the channel width added on top of resistance. So what we're going to do in this example is we're going to go look to the paid money account. And what I'm going to do is I'm going to go to GS, pull it up, okay? Right click on the ask price, go to actually buy custom with OCO bracket, okay? So there it is right there. Now, what I want to do is I want to focus a little bit on that margin account because we haven't bought as much in the margin account. The keyword is yet. And what I want to do is I want to try to place a $3,000 position on really Goldman Sachs But I'm also going to do this in the IRA as well. If we did $3,000, it's only going to be 3 shares. Noted. But if we did it in the IRA account, 151,000, 80%, no more than 10%. I think we're probably looking right around $12,000. Okay. So I'm just kind of sizing up the position for just a second. 3 on the margin. We take a look at this and say, what is that? It's about 13. Now, what I'm going to do is I got 3 in the margin, 3 shares. I got 13 shares in the IRA. So when we go to this confirm and send in just a moment, we're going to say, look, the account, we're going to say multiple, okay? And we're going to send it in both accounts. And we'll show you how to do that in just a moment. Now, first off, the target. We already said the target. Where is it again? I'm going to put 970. Now, can anybody remind us what our potential stop was? The initial stop. What was our initial stop that we talked about? Not the trailing stop, not the stop adjustment. What was the way we were kind of looking to say, I'm going to set my stop below where? Well, we said go back to like the last 1 to 3 weeks, look and see where we see a pullback and or support. We could say a pullback area might be in the vicinity of 872. If we talk about it from the low point, probably where we have more touches is probably right around 881. 881 and change, if we did that, less 2%. Why? Because it's over $50. We're doing exactly what we talked about on those plans, 863. So what I'm going to do is I'm going to go back to 863.87. There it is. Dated GTC. And now what I got here in this case is we said 970. Dated GTC. All right. Now, for just a second, so there's the target price. There's the stop. Now, remember how that stop works. We're saying if it goes to that price or less, it triggers it to sell. That's not saying it's going to sell at exactly that. That's one of the cons of a stop. To trigger sell, it could fill lower. Confirm and send. Now, when I do this, what you're now going to notice is, at least it was doing right now, is I'm not seeing that it's actually giving us, and I'm going to want to go back and just do this, see if I can't. There it is. Okay. I want to see something just real quick. It's not showing me that. I might have to send these separately, but we could just punch it in real quick. So if I go, there it is. Okay. So when I go confirm and send, it's going to say single. I don't want single. I want the multiple. We have the margin, the IRA. We're going to click on the multiple accounts. I'm going to take 3 in the margin. We're going to take 13 really in the IRA. Now, what you're now going to, they're just different capital amounts. Same trend, same stop, same target, everything. Now what it's going to do is it's going to take this in total. Okay. So these numbers, it says 53, but it's really going to be 16 shares. You got the target, and there, as I update that, it now updates the shares. Now it does after I press enter. Target, stop, we talked about that. We're going to send the order, okay? So there it is. Why does it say times 2? Well, because it's in 2 different accounts. Why does it have negative 13, negative 2? Well, because it's taking a look at all the accounts, and it's showing us we have 2 different orders. Now, if I go down to, let's say, just the margin itself, it's only going to show the margin position. If we show, let's say, the IRA itself, it's going to show that position. If I go back to, let's say, all, it's going to show that we have those 2 different orders. That's why it's showing that, okay? Now, let's say I was a nervous Nelly or James, okay? Maybe it's not Nelly, maybe it's James. And I said, hey, it's too high. Well, let's go back and quickly look at that. I highly doubt that it's too high. Now, if we went back and look at this, the 10-day exponential moving average really being in the area of support. Well, that, if we look at that yellow line, we're not even 3% above the 10-period moving average. If the investor is trying to get in close to support, they're trying to buy above the 10 and maybe no higher than the 3% line. Why? Because it probably tells us that if it is bouncing, it's earlier on in the bounce. Okay? So we can't say it's too high. Can't say that. All right, now, Are there any questions with that? Now, I want to kind of just show two other stocks. I'm not going to kind of do them, but the other one I'll look at just real quick is the AXP. That is a similar type trade, but it's kind of this, it's right there. It's trying to get a bounce. The green dot again is showing us the close above the high of the low day. The lowest, most recent red candle was on 12/18. So the first time that we actually had close above the high of the low day was on the 22nd. And really, we're just up 2 days from there. To me, those trades are very similar to the GS and the AXP. This is also something to keep an eye on as well. The other two I think are worth noting in that space. The BK, the ticker symbol there, has your classic kind of maybe 3-5 day pullback, gotten a decent bounce there. The other one I think maybe some investors might look at, might not be as well known, is the STT. That one has more of that fresh, smell that? Fresh. Call hold today or trade above the high of the low day. We cannot say it's too high. It's right at the yellow line, but it's, that's where it is, okay? Now, if you look at this, this had lots of green candle. We're not on Heikin-Ashi candlesticks. These are regular candles here, okay? There's your classic flag pullback, and you're going to see that we only had a 1 day pullback and then kabuya, pushing back to the upside again, okay? So someone here is buying the dip. Somebody is, okay? Now, so the comment is, now, why do I bring up this ticker symbol? Why? Well, because I'm not allowed to bring up an ETF. If it was ETF Friday, we could bring up what you're asking about that ticker symbol. I have to bring up an index. I don't care if you want to look at the one you want to look at and I'm looking at this. We're talking about the same thing, okay? We're just using the ticker symbol to kind of get an idea of are there setups in the space. Now, let's go back just real quick to the IXT for just a moment, okay? So when you look at technology, got a little push there. A couple stocks that I want to kind of flag here in this space. So if we go look at, let's say, AAPL, and by the way, let's kind of pull this up for just a second. Let's just kind of make sure we have the tools and we're able to identify. Because here's the thing. You can buy a tool. It doesn't mean you know how to use it. I know all about that, okay? Now, if I click on this, I'm going to go to sectors. I'm going to go down to public, and we're just going to pull up the Dow Jones list, okay? So there it is. Now, let's say we're looking at this and we're saying, are there any setups? Now, we know that we could look at the trend weekly. That's going to help us see trend. We want that to be green. Second, if we actually see the trend daily green, that would actually be good as well. But I just want to talk about entry setups for just a second. Those entry setups are really going to be like a tall hold, call hold, 20, 50 day high. I want to move this breakout column so the breakouts are all in the same space. Let's move that there. So you got bounces, okay? You got breakouts on those three columns, and you got crossovers. And if you don't mind, I'm going to put the moving average crossover there and the flag right there. Now, if I looked at this list and said, geez, are there any things today that could be really showing a fresh cross? Well, if we're talking about fresh, like a brand new 10-day moving average going green today, yeah. Now, by the way, could you hit that column right there? Could it rank it for you right at the top and say, these are the things, or this is the ticker symbol that has had a fresh crossover where the moving average was red that turned green? Yes. You're going to also notice that the 20-hole moving average has been green, red. So we have some early signs here that we're getting a little push on really Apple. You're going to also notice on the crossover, which by the way, this is all right on my X. You can just go out and take it, okay? And if you look at that, that's a fresh crossover. Now I don't care if you know what a crossover is. I want to know, hey, did you do an example of it? Okay. Now let's go look at just real quick on the Apple front, just real quick. Now, by the way, I just want to kind of point something out. On the weekly chart, Apple shows it's a trend 4. Now that means on the weekly chart, it's really been in or currently is in an area of resistance on the weekly. Now, we don't normally see trend twos very much, and I said why. Well, because when people tend to see trend two, they try to hurry and get in, hurry and get in, hurry and get in, so they could buy, on a fresh breakout. That trend two does not last very long. If we start to make a higher high above a shorter term moving average, and we start to actually push up higher, it shifts into trend three. So kind of a little unusual circumstance on this. Now, I'm going to pull up just real quick that Apple position, and this is what it looks like. Now, how many of you know an investor that says, man, as soon as that stock falls down to support, that is my setup? Oh my gosh, if we had a dollar for every time someone said that. I like to get in as soon as it falls down to support and then it starts to bounce. Well, what is a bounce to you? Well, if someone says a bounce to us, what does it look like? Well, I'm not even going to have to use words, because what you're going to notice on this chart, if I take that line off and I kind of zoom in, these green dots are really showing us. So there's two things where we don't need words. Number one, if we said we're trying to buy on one, we have the moving average going green. We have that. Second, we actually have the crossover. Okay. Now, so we could visually just look at the chart. Don't even need to use words. The other thing that we actually have on this chart is that little green dot, trade above the high of the low day. Why you haven't said close above the high? Because we haven't closed there. Okay. Now, some people like to actually get in that signal during the day. Now, what we're going to do is, since this class is called trading that growth and value, we're going to go back to this chart and kind of say, now we're kind of wondering. Now, when someone's trading, many traders will just try to take that prior high. Now, we don't know if it's going to go up to that area, okay? But for many technicians, they kind of look and say, could it? The word is not swing back to the prior high. The word is swing back to the prior high. So what we're going to do in this example, we're going to go back. Now, here's the thing. Let's say I say it's too high, okay? Well, let's go look and see if it's too high, okay? Now, if I said, okay, so first off, a little different situation. We had been below the 10-period moving average, and we actually had a downtrend. Today, on that daily chart, the price poking its nose above the 10-day exponential moving average. Can't say it's too high because we're barely above the 10. We're not even close to the yellow line yet, okay? Now, let's go back to that chart. So I want to kind of just reemphasize what we've talked about. If you say, James, I don't have this chart, let me put a stocking stuffer. I want to put two gifts in your stocking right now. And first gift I want to put in your stocking is these charts. These charts are extremely helpful. There's reasons why we actually use the different charts. They're like different tools in the toolbox. You have a toolbox. You don't have just one tool. You have different tools for different types of jobs. It's the same thing with the charts. That link that I just sent to you, you just go to the very top right, go to Setup, Open Shared Item, and then copy and paste. Okay? That's all you got to do. Setup, Open Shared Item, copy and paste what I sent, go preview, and then import that. You're going to get a small package of charts. You get the small package of charts. It pulls up right there. And you might say, well, how do I save this to my side since it's in my stocking now? Well, once you have this, you just go to where it says, click on that right there. And you're going to see Save Grid As. And if you do that, now I'm going to put this in Dean's stocking. Okay? Dean. That's my dad's name. My dad's middle name. Click on Save. There it is. So now when I go back to those boxes again, there's Dean right there. And it's going to load these charts. Now notice when we actually go forward here, we're just rifling through those charts. And it just shifts through them. Okay? That's all it is. So that's how you put it on. So that's one stocking stuffer. If you said, James, I actually really don't have what you had on the Market Watch, you can go right to my X page, and in blue are the scripts, the codes for those column headings. I can think of nothing better to do on a holiday than to make sure that you have those column headings. There is a way to send all of them, but I want you to actually pick the ones that you want in your column headings. They're all right there. If the hardest thing for you to do is to type them in or copy and paste them in, I just don't think it's that hard, okay? So go for it. There it is. Accept my gifts. Now, the biggest actually thing is, let's go back to this. So when we actually look at this position, we're going to right click on the chart. We're going to go buy custom, and we're going to go with OCO bracket. Now, we said last week that Apple tends to have more seasonal type sales, Christmas time, etc. So now what I'm going to do is we're going to go back to this and say, could it try to go to that old high? That old high is really where it's going to be in the vicinity. If it were to go up there, about 286 and change. Now, if you said, well, James, I'm not going to get in, that's the highest likelihood that could go there, but I think it might try to extend higher. Well, okay. I mean, look, I'm not going to argue with you. So I'm going to show you where that extension might be. The prior high down to where it fell down to. If you said, James, I think it might try to extend higher, that extension is in the vicinity of 291. Now, if you said, no, James, I'm going to even put something a little higher, maybe 292. Okay. If you want the extension target, 294.5. If we kind of said we're going to shave a little bit off the top of that, we got about 292.5. I'll put it right there. Dated GTC right there. Dated GTC right there. I'll put that there. I'm not going to argue with anyone. If you want the extension target, I'm going to put it right there. Okay. I took about 1% less than that number to try to get ahead of other investors who might try to sell there. We're trying to get out before those other investors have their sellers potentially filled if the stock were to go there. Now, number two, where do we talk about the initial stop? The initial stop, we're sitting on the support. Here it is at 271 and change. 271, we're going to put 271, okay? 271, calculator please. Where's the calculator? There it is. 271 and change. 271 and change, less 2%, 266.46. 266.46. Let's confirm that. Yeah, that looks right. Dated GTC. Now, again, let's go back to kind of the position sizing. So if we kind of said, okay, how much could we actually do in the, let's actually just look at the numbers. If we did a $3,000 position in that margin account, double check, it's about 10 shares, 11 if we pushed it. If we actually did, example given, about $12,000 in the IRA, 12,000, it's going to be, in this case, about 43. So we got about 12 and 43. Now, I'm going to go back to this just real quick. Let's take that off, confirm and send. I'm going to go back to the single, nope, multiple. We're now going to go to put 12 in the margin and about 43 in the other one, okay? So for us, in our examples, whatever is good for one is going to be good for the other. I don't see any difference between a lower, bigger dollar account. The only time we would actually say the IRA, we're just going to do that one, we're out of money in the margin account, or maybe you just can't buy any shares at all, okay? But most of the time, it's going to be because the margin is already fully invested. So I don't have this wall of, no, I wouldn't do that for this account compared. No, if it's, to me, if we're trading trend, we're trading trend, okay? Send the order. Now notice that stop again. If it goes to that price or less, sell it. Could fill at a lower price. Got a target. Send the order. Why 55? Well, because it's actually splitting up. We got 55 total shares in the portfolio. Send. There it is right there. Okay, now what I want to do is I want to show just a couple stocks for just a moment, okay? Now, the one thing I want you to kind of notice is, was Apple today just down a little bit? Did it go down intra the morning, and was the candle red? Yeah, it was red, okay? And a lot of investors would just pucker, oh no, red candle. But remember what we've actually hammered at in 2025 is the red candle doesn't really mean anything if the price is above the short-term moving average. We've said that so many times in 25, it's unbelievable. Why do I bring that up? Well, just so happens to be there's another small company called Amazon. I want you to also notice that Amazon also had an intra-morning dip. Oh no, it's a red candle, it's bearish. Wait, but we're above the 10-day moving average. See, the thing is we can pucker to emotion so much that all of a sudden we're not a technician anymore. We're someone that just does feelings. Technician isn't about feelings. They're actually trading the trend. The fact that the price was down like 40 cents, 30 cents, it's a $200 stock. Okay. So now I just want to kind of point out, when you look at, let's say, Amazon for just a sec, I'll point that out there. This is kind of in that situation. Could it reverse? That reversal area is about 234. It has a channel going into the, let's say, Friday and or next week. If there is one that might try to reverse, keep an eye on Amazon. Now, the other one that was the same idea of what we're talking about is really, if you take a look at this, it was NVIDIA. NVIDIA had the big candle yesterday, and today we're trading so far inside that candle. It looks too high. Well, let's go to the chart or tool that can verify that or help us kind of see where we are in that area. I'm going to click on the back arrow, and we're, oh my gosh, we're right there. Now, what you're now going to notice is if the investor said, look, I'm trying to get in, they might try to get in, let's say 3%, no more than 3% above that 10-period moving average. Because if they bought 3% above the 10-day moving average, it's just now basic math. If we set a stop below the 10-period moving average, well, the distance there between +3 and -2 would be 5%. Many technicians, especially if they're trading, they might say, look, I don't want to take more than maybe 5%, max 7%. If we were at the 5% line, set a stop below the 2%, below the 10-day moving average by 2%, we would literally be risking approximately 7%. So this risking 5 to 7% is important because, remember, if you're trying to get a 5, 7, 8, 10% push, we're trying to buy closer to support. This allows us to gauge where it's at numerically. Okay? Now, what I'm going to do on this one, and it's down 97 cents. And what's the point? I don't get it. Okay? If I go take a look at this, we're going to right-click on this chart. Now, if we take a look at this, if we go back to, we're going to go buy custom with OCO bracket. Now, when we take a look at the prior high, the only other prior high that we really had, which probably matches, is going to be right in that vicinity. You got about 195. Now, what I'm going to do in this case, normally we kind of talk about, hey, we got 190, by the way, you got 195. You got another area that's probably about 202. You got another area that's about, let's say, 207. Those are probably your markers, okay? Now, if we were to take a look at this, I'm going to set a target. Let's kind of say, I'm going to kind of set it in this case. Even if I said I'm going to set it in the middle between to the target 1 and the target 2. That's going to be right about the $200 marker, okay? Data GTC. Data GTC. Now, if we kind of said, where do we see the support level? Well, the old resistance was right around 183. The idea is that we don't have any confirmation that it's support, but we're anticipating. It's not a bad word, okay? Anticipate a lot about a lot of things. People go to work assuming they're going to get paid. They're anticipating, okay? Now, if we take a look at this, 183.18, Apple fills, less 2%, we're going to set a stop at 179.51. So I'm going to type in 179.51, data GTC. We did that. I'm going to go back and kind of look at the number of shares. If we took a $3,000 position in the margin, how many shares is it? 15. If we actually did example given, 12,000 in the IRA, how many? 63. So let me just confirm again, 63 in the bigger one, 3,000, got 15 and 63. Now what I'm going to do is going to come back to this, go confirm and send. What I'm doing is I'm looking at this. We said the target area. I'm kind of putting it between the two resistance areas, okay? The stop we actually typed in. Let's confirm on that calculator. Now, by the way, you're probably not teaching a class where you don't have to just only go on one screen. This is where 2 screens are extremely helpful. Don't feel like you have to have all these different windows. I mean, just put them on 2 screens. By the way, you can get a lot of screens, 24 inches, 27 inches, pretty inexpensive, okay? Doesn't even have to be unbelievable quality as far as pixels. Okay. If we take a look at, and it's helpful not to have so many things behind each other. So there's the stop. We talked about that. I'm going to put the 15. Okay, let's go single count, multiple. Let's put the 15 there. And we said 63 there. Okay. Now it's going to be 78 shares total. Okay. Now remember, if we said 188.21, could it fill at a lower price? It could. We're about ready to find out. Now remember how the stop works. If it goes to that price or less, it's triggering to sell. Could fill at a lower price. Now the opposite side of that is if we say sell limit at 200, could it fill at a higher price? It could. Okay. Send. And there, what you're going to see now, by the way, I got rejected on one, which is, I believe it's the IRA. I will fix that. The one where it did fill is it did fill those shares in the margin. Okay. So I will go back to actually fix that and kind of see why that actually did that. Now, I want to go back. I just want to fast fire through a couple stocks. One of the areas that we also saw a little push here today so far is IXI. Okay. When you look at IXI, that also got a little push. When you look at this, this is another higher low. Now, if we said, what is the one stock? If you actually think industrials, meow, okay, kitty cat, okay, cat. If we actually see industrials actually go up, Caterpillar has actually been a pretty good example of something that's correlated to the move. Keep an eye on Caterpillar. The second stock we'd actually probably keep an eye on there is Cummins. Those two have been very correlated to if industrials are going up, those stocks historically have gone up. That doesn't mean they're going to do it in the future. We're going to keep an eye on them. We would also actually say keep an eye on NOC, Northrop Grumman, a bigger dollar stock that's kind of right at this area of resistance. Kind of has a shoulder melon shoulder. Now, some of you are not familiar with melon. Some of us from the South could tell us that it's head, another term for head. That is getting a little reversal. It broke out. It's trying to make a higher low. Northrop Grumman. Yours truly, GE, has also been in a classic U and or V pattern, and you could see it. I don't need to zoom in on it. When we talk about the duration of time it took to drop down versus the duration of time it took to go back up, if that duration of time it takes to go back to the upside is shorter than the drawdown, the path of least resistance on a probability basis could be high. There could be a continuation pattern. Why did investors buy it up so fiercely in terms of time and percentage? And it just kind of slowly dripped down over time. Keep an eye on GE as well. That's another one. The last one I'll kind of make mention here is Boeing. Boeing actually broke through the bottom. The bottom of this channel was 211. It's at kind of the midsection of that. Path of least resistance, 223. If you are a channel person, that has probably been on your radar. And Boeing, of course, is in the Dow Jones. And the Dow Jones only has 30 stocks, so it's probably not very hard to see that. The one last thing I'll say on Boeing is we see a one-day down followed by a trade above the high of the low day or close above the high of the low day, which is another sign for momentum. If you only get 1, 2, 3 days down and it fires back to the upside, that could hold. That is your classic sign of momentum. This is showing a potential higher low. Now, I'm out of my time here today. Let's take a quick wrap where the markets are, and we'll wrap it up with a nice wrapping paper and a bow. Dow Jones, if we take a look at this, if we look at that, where's Dow? Dow is sitting 276. Crossover could be imminent. When we actually take a look at, let's say, the SPX, if we closed here, the S&P 500 is actually sitting at a record level 69.33. Oh, those bears. I feel bad for them again. Now, if we also take a look at the NASDAQ, the thing we would say with the NASDAQ is keep an eye on the breakout as the price is pressing up near the area of resistance. Now, coming up next, we got Brent Moores that is going to be doing a class on, let's go back to this, managing an option portfolio. I gave you 2 gifts I want you to stuff in your stocking. If you don't have those gifts that I gave you, I want you to unwrap those. Get them and unwrap them. Put them on your platform, on the MarketWatch page and the charts. They're critical tools for us to actually look at setups, manage positions, evaluate setups, and so on. They're keys. Okay, we've talked about that. Stay tuned for Brent Morse coming up next. I want to wish you a Merry Christmas. Now remember, again, tomorrow we don't have any classes. Friday, we don't have any classes. So feel free to also go back on our classes that are posted on the Trader Talks. Subscribe for free. That way you can actually see all of our content for free. Again, stay tuned for Brent Morse coming up. And again, Merry Christmas to you, your family, and your pets. With that said, this has been the class on trading growth and value stocks. Merry Christmas. Take care. Bye-bye.